This is Drill Down Earnings with a quick look at the results from ARM, a really important company, one of the 50 most important companies in technology. That's why I, Cory Johnson, covered for Epistrophy Capital Research, because those are the companies that we cover. And indeed, Q4 2025 earnings from ARM were really interesting. It was better than Wall Street expected, better than their own guidance, slightly, but the forward guidance maybe not as strong. Let's look at what we actually got from this company. So 34% growth in the top line for this company, with $1.241 billion in earnings, and fantastically profitable business. Of course, their operating profit margins, in fact, are now up to 33%. Very strong for this business. It is driven by license and royalties, so that they design the chips, they create the platforms for other chips to be designed, and then just collect those royalties. Think of it as a kind of a methodology. Think of like Legos for semiconductors. They're doing quite well at that. Some of the biggest chips, heck, the NVIDIA Blackwell, the most complicated chip ever made, is being designed on top of an ARM architecture. So their license growth up 53% in the quarter. Their royalty business up 18% in the quarter. And revenues in any given quarter are about 50-50. I think it was 48% royalty this quarter, but both businesses going really well. So record quarterly revenue of $1.24 billion, crossing the $1 billion mark for the first time in this company for the full year. $4 billion, another record for the company. It's driven by AI. So energy efficient compute, especially for AI workloads, whether it's in the cloud, at the edge, on devices, that's what's really driving growth for these guys. 50% of all server chips shipped to the top hyperscalers in 2025, they say, will be ARM-based, whether it's going to AWS, Google Cloud, Microsoft Azure, doesn't matter, they'll be based on ARM architecture. And their royalty revenue up 18% on a year-over-year basis, driven specifically by their ARM version 9 or ARM v9, I think they call it, CPU adoption, as well as deployments across the smartphone industry. Their smartphone royalties rose 30% despite the market being flat. So they're taking more and more share of the silicon in smartphones and winning new licenses all over the world. And so they also talked about how they're developing ways to stay in these systems, working with GitHub. They've got a free GitHub Copilot extension with 8 billion cumulative installs of their Cleedy AI software layer. I couldn't possibly use it, but I know what it is, and I know why it's so important, because it means that ARM's going to be in a lot more things designed in for a long time. So a very strong quarter for ARM as well. Now, as we look forward, though, the guidance was just not what Wall Street wanted to see from this company. A real bummer, because they put up a decent quarter, but the stock down 11% as soon as that thing hit the tape with the guidance in the press release. And indeed, the stock's up only 13% for the year. That after-hours trading might wipe out the entire gains for the year. Nonetheless, the CEO, Rene Haas, was bullish about the industry over the long term, but what he thought is really the big concern now, well, the window of their guidance wasn't any larger than it was the previous quarter, unlike some companies like Coherent, another company that we cover. But they talked about, they just don't know where tariffs are today or where they're going to be in the future. And it makes them really hard, even if it doesn't affect them directly. They know that the end markets are going to change. They know that the suppliers of ARM chips are going to have to deal with this. And as a result, they've got some pretty wide guidance. Here's what Rene Haas, the pride of Rochester, New York, had to say.
We don't have direct impact on tariffs, since tariffs today are really applied to end products, and they're not applied to services, which is what we're providing. That said, we haven't seen any impact on tariffs. From tariffs in Q4, haven't seen any impact and don't expect any impact in Q1. For the remainder of the year, it's really going to be on the indirect side. Is there going to be some sort of impact as supply chains may be affected as they react to, whatever tariff impacts eventually, work out to be. So as a result, we don't have as much visibility from our partners as we may have had in the past.
All right, well, there you have it from Rene Haas. But what's your takeaway from all this confusing different stuff at ARM? A good quarter, bad guidance? Was it really bad guidance? What does it mean? What's the one number that tells us a whole lot? I've got that. So Q4 Fiscal Q4 results from ARM out is your essential summary. A strong quarter of this company, $1.24 billion in sales. Expenses of only about $566 million. So a very profitable quarter for this company. And nonetheless, their guidance was disappointing. And maybe the one number that tells us a whole lot is what happened with their licensing business. The licensing business saw 53% on a year-over-year basis growth. That was really strong. Concerns about tariffs and the uncertainty of the future causing maybe weak guidance. and a stock sell-off to boot. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson.